us through the first mutual gold ETF. It's been 2 months the ETF has been listed, and how would you assess its performance so far and its attractiveness to both local and international investors?
Thanks, Pride, for your question, and good to see you once more. So, from a performance perspective, I would say we are very much happy with the performance. Obviously, I think you will remember that as with any ETF or any new product that's listing, there's always early trading euphoria that happens. So, first day, I think we did see up about 40%, but over time, we've seen normalization of trades. Currently, as of yesterday, the last trading price was 14 cents, which gives you about 35% on a year-to-date basis. So from a real return perspective, we'd say the performance has actually been quite good, in line with our expectations for the particular product that we did about.
And you have touched the other part of my case to say this ETF has actually met what we expected. But also on that note, what is your current trading volumes when you look at the ETF?
So by the very nature of the product, you would not have your serious volumes that do trade. So since listing as of the 11th, or rather the 10th of June, we are looking at about 1.5 million units having traded, and the value of trades is just under $190,000. So it has been quite active on the market relative to the other ETFs. Even though the other ETFs are listed on the ZSE, the trading has actually been quite active in line with the innovative product that we did put across to the market.
On that very same note of trading, how would you view the investors? Are they actually trading or holding on to their trades?
So what we always thought would happen is the gold ETF is a longer dated, it's a medium to long term product. But obviously, if someone makes a return of 35%, it's normal for someone to want to crystallize. But so the trades that we largely see are mostly retail, like your individual investors, where you're looking at the $100, maybe below the $5,000. Because if you just look at the value of trades, they are mostly what we would call odd lot trades, the very small volumes. Institutional investors, by their very nature, they hold with an investment objective of maybe portfolio diversification, growth in the long term, currency and inflation hedging objectives. So those are not realized like in a month or so, but any other retail investors, because the moment you get a 30 odd return in US dollars, you can actually crystallize and reinvest your gains into the fund. So some of the trades that we have seen on the market, some other institutional investors are coming through the market. We'll see maybe volumes upwards of $50,000 in value terms. That's usually not a retail investor, that's a typical institutional investors. You can buy through us, or you can go straight to the Victoria Falls Stock Exchange to buy the units since it's listed. So that's the trend that we can see.
You've checked with the investors. During the subscription phase, you said that there were about 60% of subscriptions accounting for the retail side. And looking at it now, has retail participation remained strong?
Yeah, so it's because of the nature of the product and easy to trade, particularly with the aspects like your VFX rate and so forth. We've actually seen retail investors rising to almost 80% in terms of number of clients, that have come onto the platform. So it's now 80% retail investors and about 20% institutional. But in terms of value, it reverses. You now see that retail investors account for about 10% of the value of the assets under management, and institutional investors account for almost 90%. It's normal, because if you're doing $100, $200, $150, and so forth, you need so much volume, which explains also why we have so many retail investors. But institutional investors, they tend to invest big amounts, so they tend to be more significant from a value side in terms of their percentage.
So from what I'm getting from you, then this means that you've gotten new investors after you've listed.
Yeah.
Okay, so the other question I would want to know from you, what has been the response from pension funds, asset managers, and other institutional investors towards the ETF?
So post-listing, we have seen continued interest from institutional investors. Remember, we had done a lot of roadshows before the listing, mostly to institutional investors. We had done webinars to even the retail investors as well. So all those investors who maybe were waiting to just see the proof of concept by listing have continued to come through. We've seen a number of institutional investors coming through. We've been in contact with other asset managers. Asset managers do hold funds for some of the pension funds. We don't have all the pension funds, but because their clients want to have exposure to that particular product, we've seen the investments coming from asset managers that we've been in contact with, as well as the continued interest from even the institutional clients who have got treasury management or who also want to maybe preserve their balance sheet given the underlying characteristics of the product that we are talking about.
From what you are saying, do you expect more institutional investors to join the ETF?
Yeah, I would say it's a no-brainer. So it's something that's ongoing. We do have like a pipeline. Because every now and again we're going to do presentations to clients just to clarify a few issues, and some do have governance issues that they just need to meet. So we expect that we're already almost just shy of 5 million in terms of the assets, and we intend to get to the 10 million, which is the approval that we do have currently from the RBZ. And the interest that we've seen, or even the inquiries, now we even have walk-in clients. Previously, we would have had to do a roadshow, do a webinar. Now we have got clients asking, how do we participate in this particular product? So it will continue to have interest from both the individual, whether retail or high net worth, and also institutional, whether it's pension or it's just corporate and other entities that want to invest.
You have said you are just 5 million shy in terms of the asset. So currently, how much are you standing at in terms of the assets?
So we are around, call it 4.6, 4.7, thereabouts.
Okay, so then looking at the market itself, the VFX, where the ETF is, when you look at it, the response, has it boosted the confidence of investors in terms of the VFX market and Zimbabwe's capital markets in general?
We might say it's early days, but obviously this product introduces diversity on the VFX, because previously you just had REITs, which are the real estate investment trusts, and then you just your regular listed entities. So now we are bringing exchange traded funds, so it produces diversity. It also depends capital markets by its very nature of bringing other US dollar denominated products onto the market. So it does help, even when an international investor wants to look at you now have to look at the suite of products that are available in that particular market. So it is our firm belief that that has really aided the development of the VFX. And if you were at the last ZAPF conference, you would have heard the comments even from the ZSC CEO talking about the impact of this particular product in terms of the development of markets, particularly the VFX itself, which is in the international financial center. So we are very much happy that it has actually helped them to actually move to be able to market the exchange to other entities or investors.
You touched a bit on the feedback you've gotten. So I want you to talk us more. What sort of feedback have you received from the investors in terms of the quality of product?
So obviously it does meet a lot of their expectations. Remember, we did say it addresses the issues of currency risk, inflation risk, and also portfolio diversification. And if we dial back a bit to pension funds, you know that they've got a requirement to have a bit of foreign exposure, up to 15%. But at the same time, it then also addresses their requirements to say you have a product that can limit institutional exposure per entity. So typically, in this particular fund, we are looking at 12.5% per asset. So it does help the institutional investors to actually be in a very good space, and it's addressing most of their issues to say, going forward, is there going to be value when someone retires? Is there going to be value when they want assets maybe to actually deploy into the other investment objectives that they do have? So the feedback has been quite positive because of the aspect of addressing the core needs of the various investors that we are talking about.
Any challenges they've raised regarding the
So I think one of the things which essentially we expected, it's even in the prospectus to say early days, trading volumes, creating units so that members can or investors can go and partake on the market. There was always a lag, but we've since addressed that. Initially, I think we're taking almost 10 days to get funds. We should get them remitted, if the relevant approvals done. Now we've shortened that process. We should be doing about 3+4 very soon. And also that allows liquidity to come to the market quite quickly. And we are also mobilizing from our own funds as First Mutual, because we also have skin in the game to ensure that we outlay money so that when someone goes to the market, they can actually be able to find the scrip, which is why I was saying earlier on, we are now beginning to see big volumes on the market. It's that scrip or liquidity that we are actually creating through the market maker that we have to ensure that when someone comes, the script is there for them, and we lessen the complaints that might come from an administrative point of view, not necessarily the product itself. Yeah.
Your point of view, still investors, how do you see them? Are they seeing it as a hedge against inflation, or a wealth creation, or just trying to see how it goes as they take on the gold ETF?
So I would say both, because you've got two facets of investors. You've got institutional, which is where your pensions and even other corporates sit on. And given the history of Zimbabwe, obviously your pensions, they want to protect value. So they'll still want to what we would otherwise call balance sheet preservation. But at the same time, you can't just defend a dollar. You want that dollar to grow because you have to pay out a member at the end. So it's both a hedge, which is the balance sheet protection, the currency and inflation hedging, but also they are looking at it as a growth. Because if you look at the design of the product, I think we recall that we have mining entities, and we have since actually received a dividend, where some of the underlying assets have since declared a dividend, which then will be distributed to the investors in the fund. So it's still meeting the hedging aspect as well as the aspect of growth. It's a growth asset. Whilst typically gold, you outside of capital appreciation, you would not expect a cash flow, but the product does deliver a dividend income as promised, and it's actually executing that exactly.
Then the ETF is linked to assets listed on the JSE. How has that relationship worked so far over the past month or so?
So one of the biggest benefits has been liquidity. Say when you want to get assets to onboard onto the FX, that we've not had any challenge. You place an order today, you know that in a day or two, all the orders are met. So the liquidity that's on the JSC has been quite useful for us to ensure that there's continued trade, whether someone comes through a broker or goes to the market. But also to say one thing that we have seen is that I was just reading today that there was a bit of a pullback of the gold price, but it doesn't necessarily translate like immediately, because the gold price can translate immediately, but when you've got a listed company within the portfolio itself, they don't react immediately because they would have gained the benefit prior. Actually, some of the companies are actually receiving buy recommendations from the market because of the dynamics that are there. But we still, it's a fact that gold is volatile. The macros that affect it are much more diverse. But we do expect that to continue to have the forecast that we had for the product to say it will deliver both capital growth as well as dividend income. And that transmission is happening, albeit not necessarily a perfect correlation, positive correlation. But we do see that at times there's a pullback as the gold price corrects on the market.
Are there any challenges to that linked with the JSE, let's say, be it operational or settlement challenges?
No, we don't have any issues because, like I said earlier on, I get your money, I send it to the authorized dealer, they just get it approved by the exchange control, they ship it to the sponsoring other broker in South Africa. And JSE is quite a perfect, almost perfect market in terms of trading. So there are no operational challenges that we are having. The only intervention that we had to make was to engage the RBZ to shorten the process. Remember, I said it was taking almost 10 days. So we're about to push it to just 4 days so that SWIFT typically is 24 hours or 48 hours, and then the other 2 days is trading. So we're just trying to ensure that the moment you invest your money, within about a week, you've got your assets are on your books.
And you're also looking then to partner more stock exchanges in the region in regards to...
So definitely we do have a number of products that we've lined up. But like you say, we are not going to be just predominantly JSE. But what we consider as we go out is to say the liquidity is one key aspect, and also in terms of any pension fund investments outside the country, the exchange that we partner with or the market that we partner with has to be part of the International Organizations of Stock Exchanges, or IOSCO. It's part of the requirements when you invest offshore, but definitely we're actually looking at partnering with other exchanges so that we have a diversity. We know JSE has pretty much all the products that we want, but you need diversity in terms of even the platforms that they need to trade.
How would you view that partnership with the JSE in terms of the ETF's performance? How would you view it? How would you rate it? How is it helped?
So from a performance perspective, the partnership itself doesn't really affect anything. That is at an administration level. But what is important are the assets. Like I said, JSE, you don't expect that anyone will manipulate a market. Like we said the other time, they trade maybe in a day what would probably trade in 6 months, in a year. So that brings efficiency. You are almost guaranteed that whatever money you put in and what price you see, if you are going to check on your own to say what are those underlying constituents, components trading at, they will deliver almost exactly that.
And then looking ahead, what are your expectations for the ETF? Let's say maybe over the next 12 months or so.
So this product is more of a medium to long-term investment, but obviously you have, like I said earlier on, if you're a trader, there will always be traders in a fund, which is what helps in terms of price discovery. But our expectation is that perhaps in a year or in 2-3 years, there will be significant growth. We do have a forecast. We've been looking at the gold forecast, which is the main input into the performance of the underlying companies, particularly, as well as the impact on gold. I think you might have seen that in the past week or two, the gold price has been retreating, largely because the US Treasury yields have been increasing. So you always have those pockets of volatility that comes to the gold price. But on the VFX, what we've seen is that increasingly investors are just looking to say, I need to acquire the asset. So there might be a bit of a disconnect before what we see on the global market in terms of gold, but just for a short period. But ultimately we expect that there will be transmission that's accurate, like you said. So we do expect that there will be dividend income, because like I said, there are underlying listed companies that are in there whose performance will not be affected by a 2-day change in the gold price. They would need maybe a structural change in the gold market for there to be an adverse impact. So we've seen some good performance. We still expect some good performance from the underlying gold companies to maybe provide support for whatever volatility might come on the One Invest ETF, which is the asset that was gold directly. So we do expect that there will be good performance, both from capital, like I said, even from now. The focus are now that the market is oversold, so there will be increasing demand that will come through. And the moment there's a resolution within the Middle East, was why yields are increasing, because the expectation of a rate cut has actually gone down. So it then affects some of those other dynamics. But we expect that there will be some bit of stabilization going forward, which will provide an underpin for the gold price, which will then filter straight into the underlying companies, provide capital on the gold side, and then both upside in terms of capital price movement for the mining companies and the dividends that they will declare.
Now, Thomas, looking back at the first few weeks of trading, what has been the biggest lesson from the launching of Zimbabwe's first offshore linked gold ETF?
So one thing that to say is that demand is there for innovative products. I think we were just talking earlier, I want to say we have seen the increase of retail investors from about 60% to 80%. What it tells you is that there's demand for good products. People are hungry to invest, and likely for Zimbabwe, I think we have known interest even ever since I was in college. That has been something that has always happened. So the moment a good product comes to the market, there's always going to be interest, and we expect that with this product that has come through, investors are still going to come through, whether at a retail level. But what we would say or encourage investors is to say they have to look at this as a long-term product, not as a speculative. We wouldn't stop you if you've made your 40% in 2 days. You can take your money, but we would still encourage that you reinvest and create wealth for yourself.
1 month or so after listing, what message would you like to send to investors who are still undecided about investing in the FMW Gold ETF?
So it's important to take a step because ultimately everyone needs economic dignity. We always read about people who have built or created generational wealth. It's because someone took the step to invest. We know Rome was not built in a day. We don't expect that you are going to bring 10 million to invest in this fund. But what's important is to take that first step and you go on your wealth creation journey. Create value for yourself, create value for your family, create value for whoever you want to actually create value for. We have to create economic dignity, and it starts with the first step of buying the first mutual wealth called ETF.
As we close off this interview, Thomas, yet there are those who say First Mutual Gold ETF with several technical flaws, and maybe they would say it's a modern day Ponzi scheme. What is your message to those people? What can you tell them about this new product, about this gold ETF?
So thanks for that question, Pride. So I think one of the key strong strengths of this particular product is that you can actually independently look. You can see through the assets. If you take the prospectus, we did list the 5 components, the One Invest Gold ETF, we did list Amon, we did list DRD, we did talk about Anglo Gold, as well as the gold fields. So you know the entities, they trade daily, on a daily basis. If you just go to on JSC, or you just type ETFs on JSC, the One Invest will come up. You just type the mining companies, they'll come up. They trade on a daily basis. The assets are not phantom, they do exist. So there will be no issues to say the assets have disappeared, but also there are protections that are there. This is First Mutual Wealth is a regulated entity by both SEC, and the product is got, you go through the RBZ for the exchange control. They have to see through on the assets. They actually were asking to say, when Pride is invested and his $100 is going out, can you show us that his Pride his $100 is going out? They have got that see through. You also have got a custodian who is in charge of keeping the assets. You've got a trustee who looks after that. You've got COPSEF who looks after the register. So there are various ways you can just independently check. But obviously, an ETF, like any other product, you always have other from a performance tracking. So we talk that you've got assets on the JSC. Do you expect a one-to-one transmission? There will always be tracking areas that come from a timing difference. Maybe I'm getting a bit technical, but that's typical anyway for an ETF or a linked or almost derivative product. Will always be tracking areas. It will not transmit 100%. There will always be those particular gaps. It can be faster, or it can maybe be just slightly below the underlying assets. So I would definitely say there's nothing to worry about. You can even just go to any regulator for us. For us, it's actually SEC. They can actually help to say, what questions do you have, what worries do you have, and we can address that. Or an investor can just go to a custodian. They can still be able to have their statement, or just have the documents that are available for public inspection. And we are supposed to have this fund audited every year, so that will also provide an additional layer of assurance for any investor. Because this asset is off balance sheet, it's not on our books as an asset manager. Those are not our assets, they are investor assets, and they are taken care of elsewhere. So there's nothing to worry about. We didn't promise you the 100% in a day like your typical point schemes. We told you that it's a medium to long-term product. We actually said 3 to 5 years. So even if you go into research on your own, it will tell you that a gold-linked asset or an equity-linked instrument is a medium to long-term. It's not a short-term asset. That eliminates that risk you're talking about. There's no first in, first out. I'm the one who came first. I have to get my returns from those who came earlier, which is how a bond scheme works. It's not similar at all. Thank you.
Anything more you feel like the investor who's still undecided or who's thinking, will I be safe with this gold ETF? Anything you feel like the investor need to know?
So what would encourage is obviously, I think in our African culture we say you don't test the river, its depth or the current with both feet. You dip 1 foot first and then you proceed. So it might be that maybe you've got a 10,000 or 100,000 or whatever it is. Take a small step, maybe do 10% of that. If it's 100 for $100, obviously you can't go below $100. So do the $100 first. See the performance, monitor the reporting, because we do report, we have to report almost on a monthly basis. And then for institutional investors, we do the same. See the performance, maybe do your 10,000, 20,000, see the performance, and then as you become much more familiar, you then can be able to scale. But what is unadvisable is just to do nothing strategy. Rome, doesn't wait for time, doesn't wait for anyone. But someone, you always have to take risk, because all the investments that we see, someone was willing to take the first step. We encourage that you take the first step, whether it's a baby step or whatever step you might want to call it. Take the first step and then learn from there. Or engage us if you've got questions. We've got various, or even your investment advice. We always recommend that if you've got an investment advisor, you can consult, or consult us. We are always available to clear out any areas that might appear gray on this particular product. It's always important to take the first step and start investing.
Thank you so much, Thomas, for taking time to take us through the first month also of trading of the first mutual gold ETF. Thank you.
You're welcome, Praj.